KEI Industries has already created enormous wealth for investors. The stock has rallied from under 500 rupees a few years ago to above 5,400 rupee today. But after the latest Q4 results, can this growth story continue? Let's analyze the business, results, future opportunities, moat and technical setup. KEI Industries is one of India's leading manufacturers of wires and cables. The company supplies low voltage, high voltage and extra high voltage cables used in power transmission, real estate, industrial projects, railways, renewable energy and infrastructure. It also sells household wires through a large dealer network across India. The biggest opportunity for KEI comes from India's infrastructure cycle. Massive investments in power transmission, renewable energy, railways, data centers and real estate are increasing demand for quality cables. Every new factory, solar project, metro line or residential project requires large quantities of cables. KEI's moat comes from three factors. First, a nationwide dealer network of over 2,000 dealers. Second, strong relationships with institutional customers. Third, continuous capacity expansion. These advantages make it difficult for smaller competitors to match KEI's scale and distribution reach. KEI reported another strong quarter. Revenue increased nearly 19% year-on-year to about 3,476 crore rupees. EBITDA grew more than 26%. Net profit increased over 25%. EBITDA margins expanded to 11%. These numbers show strong execution despite temporary capacity constraints. Cable business remains the key growth engine. Cable revenue grew nearly 18%. Extra high voltage cables grew more than 50%. Housing wires also delivered strong growth. The product mix continues to shift toward higher value categories, supporting profitability. The next growth phase will be driven by capacity expansion. Management expects 17 to 18% volume growth and around 20% revenue growth in FY27. The Sanand plant ramp-up and growing exports to the United States can become major earnings drivers over the next few years. Technically, KEI remains in a powerful long-term uptrend. The stock is trading above the 50-week, 100-week and 200-week moving averages. Relative strength versus Nifty is improving. Weekly RSI is around 68, indicating strong momentum. The recent breakout above 4,300 rupees has acted as a launchpad for the current rally. Based on chart. Support 1, 5,000 rupees. Support 2, 4,300 rupees. Major support, 4,000 rupees. Resistance zone, 5,700 rupee to 6,000 rupees. Investors should also monitor key risks. Rising copper prices can impact margins. Export disruptions can temporarily affect growth. Since the stock trades at premium valuations, earnings execution must remain strong to justify future returns. KEI Industries remains one of the highest quality infrastructure plays in India. Strong demand, expanding capacity, growing exports and improving profitability support the long-term story. However, after the sharp rally, investors should expect periodic corrections. The long-term trend remains bullish. If you found this analysis useful, subscribe to the channel for more Techno Funda stock breakdowns. Join our Telegram channel for daily market updates, technical analysis and investment ideas. See you in the next video.